We're coming to you from the CoinDesk podcast studio presented by BitGo. Founded in 2013 with the first institutional-grade Bitcoin wallet, BitGo is the gold standard in custody, staking, and settlement. Today, BitGo supports over 800 coins and processes 20% of all Bitcoin transactions by value. Check them out at bitgo.com. All right, let's bring in our next guest now, Franklin Templeton's Executive Vice President and Head of Digital Assets, Roger Bayston. Welcome to the show.
Great to be here in Austin with you guys. Thank you.
Yeah, we were just talking about the vibe at the conference. Talk to me about what you've been experiencing as a traditional firm. I know that you are one of the more forward-thinking traditional firms, but as a traditional firm here at Consensus, what's your experience been like?
Well, look, I think over the past months, especially with the, coming to market with the spot Bitcoin ETFs, seminal moment in the industry, not just for the crypto industry at large, but also the asset management industry. And we're just super excited about what this allows for clients to access in these more traditional brokerage dealer accounts, these opportunity sets, which really should help clients with their total outcomes and solutions when they're thinking about investing, whether you're an individual investor or whether you're an institutional investor exploring all of this.
I know Franklin Templeton puts out a lot of research about a lot of different corners of the industry, really trying to understand what's going on. What kind of conversations are you having when you're walking the floor and talking to all the folks who have booths and exhibits here?
Well, to be honest with you, we probably spend almost, well, I would say about 60% of our time outside in a lot of different interesting conversations with folks. We've done two things. Franklin Templeton offers advice. That's what we've been doing for 76 years. We are a trusted brand of investment advice. That's what really makes me most excited about blockchain technologies, how it might unlock a vast variety and increase of opportunity sets for clients to weave into their portfolios. That's the most exciting thing that I do. But we also have built substantial infrastructure related to our Franklin On-Chain U.S. Government Money Fund, which we affectionately refer to as Benji. That opens up a lot of conversations for institutions who are beginning to come in this place, but don't want to spend the years that we've been in developing in order to get themselves accelerated into the marketplace. So we have a lot of great conversations about all of those. It helps that we do have, through some of our social media presence, have had some pretty interesting uptakes on some of our things. People know Franklin Templeton, and they want to talk to us about any number of things.
One of the things that you're known best for is active management, right? And I think where do you see the future of digital asset active management in the advisor channel?
Well, boy, if you think about the number of things that might be considered digital assets, not just the tokens that represent the tokenomics of the underlying blockchains, but CBDCs, NFTs, meme tokens as well. The opportunity set is rapidly expanding. How do you navigate those waters to protect yourself? Active management is going to play a part. I think just getting exposure through beta is also a pretty important part, and that's where I think these ETFs, both the spot Bitcoin and then the oncoming of the ETH ETF, will also help do that. But by and large, it is a wild world out there. Seeking advice is always a good idea.
Do you think that we'll have good wrappers for those more, enhanced or more active portfolios? I know that you do some work with some SMA platforms. Like, how are people going to get access to those best portfolios?
I think just like we've seen in TradFi, those access points are going to come through a number of different ways, depending on, what your adoption may be. Super excited again about the ETF, and we've seen the massive success of that. That's going to be a delivery mechanism, but SMAs in the TradFi space, because of the customization and the tax considerations that people have, are also an important delivery item. We just want to offer that advice where we can meet the clients wherever they are.
How are you thinking about remaining competitive? I know you brought up Benji. I know BlackRock's tokenized fund recently overtook that. With the spot Bitcoin ETFs, we saw a bit of a fee war that everyone was talking about. With more of the asset managers coming into the space, with more asset managers starting to look at the different corners of the industry, how is Franklin Templeton remaining competitive?
Well, one of the things I think that makes us competitive and compelling to speak with about this advice is the fact that we are building in blockchain network environments. between Benji started and Stellar, it's migrated toward Polygon. Last year, this time, we had an announcement about Polygon. You know, I think you can expect us to think about these, we like to call them digital nation states that we want to bring product into. So we understand the core technology about that. We're not just offering advice because of what we think may be, I don't know, supply and demand or other things, but we're building in the environments. We have opinions about which environments are suitable for RWA projects, quite frankly, and collaborating for the past years as we have with the SEC about that, I think it gives us a good position there. In addition, we operate nodes on these networks. We are part of the networks. We're not just opining and offering services. We have a variety of things that we're doing that help support this idea that we offer great advice in this space.
Let's talk about Solana. I know that Franklin Templeton has come out and said Solana could be the third biggest cryptocurrency. Why Solana? Talk to us a little bit about the research that was done there.
Well, there's a lot of really compelling stories, obviously, built around Solana. And I think if we were trying to forecast what might happen next in these ETF delivery mechanisms, I think there's some speaking about that. We're really excited about the maturing of the industry. This idea of your announcement with the NYSE and options, risk management tools are vital for all investors to participate in here. And so I think as we continue to see those develop around any number of tokens, whether it's Solana or others, that is going to be another place where adoption moves from not just kind of the do-it-yourself and the crypto natives, but into the more traditional delivery mechanisms and institutional investors.
Let's go back to Benji for a moment. I think that whole concept might be underappreciated, right? Because people are thinking, I can already get this. Why do I need this in this format? But when you think about how on-chain portfolios or crypto-native portfolios need things like collateral enhancement or need a tokenized version of somewhere to put unrisked, de-risked cash and get yield, do people understand that, or is that still an education process to unwrap the significance of something like that?
I will tell you that in the overall crypto industry was really surprised, what was it, a year and 3 or 4 months ago when the events of Silicon Valley Bank and First Republic, the lack of understanding from financial managers about the difference between a bank account and a fully collateralized money market fund was entirely absent, right? And so conversations within the community obviously began to accelerate. My 35, 40 years in asset management, the one product that I know that you can use the word stable in is a money market fund, stable NAV. If we can continue to unlock and work collaboratively with our friends at the SEC for permissions about using public blockchains as part of the underlying ecosystem, I think you're going to have another complementary product alongside stablecoins with that key differentiating that you just pointed out, yield, that comes to the investor, the user of the product, as opposed to the stablecoin operator themselves.
Right, so that sort of removes the problem of onboarding and offboarding if you want to access that money market yield again. You can keep everything in tokenized form and not worry about it.
Yeah, maybe I'm being very basic here, but I think of stablecoins are very similar to banks. Give me $1, I'll give you that $1 back. I'm going to invest that to earn return, and me, the bank, is going to take that. Banks and money funds have existed side by side literally for decades, and literally there's trillions and trillions of dollars across the planet Earth that are in money fund constructs. We think inside of these walled gardens, these permission gardens where we know who the clients are that go through AML, KYC processes, that using tokenized money funds is a great addition to the overall digital asset ecosystem that will benefit users of all types.
Now, Franklin Templeton is known for putting out research, like I said, about many different areas of the industry. What part of the industry are you investigating now for maybe potential products?
Well, again, I think we're focusing on this watershed event that has happened over the past couple of months. I mean, a year ago, if we all sat here and said, are we going to have a spot Bitcoin ETF, and is it going to be the most successful ETF launch ever that occurred? We'd all been really surprised.
No.
They said, no way, right? And so the dynamic of the great thing about being in this space and industry is things are always fluid and changing. I think what Franklin Templeton represents is 76 years of a brand of trust, of advice. And so things that are lasting and things that actually have real value, we want those benefits to accrue to our shareholders and clients globally. And so we will find those wherever they may develop in the space ahead.
Is there ever any internal tension when we're talking about digital assets with maybe some of the more traditional folks who have worked at the asset manager over the years, or is everyone kind of accepting of the innovation that's happening?
Well, I think one of the benefits of Franklin Templeton, and we saw her yesterday, my boss, Jenny Johnson, on stage here, you have to have the direct leadership. You have to be able to have a vision. And one of Jenny's great attributes is she spent so much time in the operations part of Franklin Templeton. And this is where we've really uncovered value. Using public blockchains for a core function that we need to be involved in. We have to maintain records and long-term records for all of the clients and all of our funds activities. That is a huge record system, and we see the public blockchains as being an advancing technology in that record-keeping system. And so having uncovered that and figured that out gave us massive confidence that these blockchains are going to be used by any number of industry and economic actors for the same sort of purpose that we're using them for. And so we're excited to be a part of that. Is there tensions that develop? There are, but I think when people begin to have use cases, I think the institutional adoption will come when within these organizations, they find use cases for blockchain in what they're doing. That happened to us, and we're looking forward for that unfolding in the months, quarters, years ahead.
Roger, thank you so much for joining us. We hope you enjoy the rest of the conference.
Thank you.
Thank you.
Was Franklin Templeton's Executive Vice President and Head of Digital Assets, Roger Bayston. We're joined now by Shift Markets CEO, Ian McAfee. Welcome, Ian.
Thank you very much, Andy.
So I have to confess, I'm not schooled enough to know much about your business. I'd love to hear about it and love for you to share with people what Shift Markets does.
Yeah, thanks. So, yeah, we've been a consensus sponsor since the beginning. We're a technology provider that helps our clients get into the digital asset space. We give them a tech stack that lets them white label the stack and put their brand on it and offer digital assets to their customers.
Okay, and I know that it's it's derivatives related, and so your clients are financially oriented companies, or what's your client base look like?
Yeah, so they're financial institutions. So they have their own customers and maybe in other asset classes. Maybe they started in FX or securities or something like that, and they've thought about getting into digital assets and want a tech stack to be able to do that.
I see. And so who's holding the risk? They're holding the risk. They're using your tech stack. And what kind of derivatives markets are you modeling this on? There's a lot of different ways. Is this kind of a futures-based thing, options, all of the above? And what kind of asset class is going to be most familiar to their experience using Shift Markets?
Yeah, so we started off in the spot markets. We just launched derivatives. We've been doing FX since 2009 and got into crypto spot 2017 and just now getting into crypto derivatives. They're doing futures mostly, so our perpetual futures like they do in our clients do in FX. So it's like margin trading and things like that.
Tell me how the business has changed since maybe 12 months ago, 18 months ago. I think there was a lot of interesting risk opportunities then, but people were cool to the idea. So, we're both markets people. We know how this works, right? The best opportunity is when everybody else is scared, but at the same time, you're scared, right? So has your business development kind of followed that same path, or, what's been the trend since Consensus 2023?
Yeah, so I think last year in the crypto space, there wasn't as much going on, and it tends to go in cycles, but it does tend to be a great time to get in because no one else is looking at the space. So what usually happens is the market dips down a little bit, the excitement dies off, and then some of the smarter guys get in earlier, and then they start, and then they're ready for the next cycle. And then we kind of see that cycle over and over again. But it's good because it's healthy. People are learning more and more about the assets. And
this is why trends should work, right? You have
exactly.
people coming in at different times, and so where are we in that trend now? I mean, if that trend maybe started a year ago, I feel like we're in the belly of it now. But how far does it have to go? What's your pipeline look like? What in terms of growth over the next 6-12 months?
Yeah, I mean, I think our biggest clients are talking to us like right now. So it usually takes a few months before the cycle really picks up. Our sales cycle is a little slow because it takes time for someone to really get in and transition their whole business into something like this. So I'd say we're about halfway into the cycle, but now is probably the best time for us.
Right. And so thinking about the the derivatives and the risk, are your clients mixing and matching traditional assets with crypto to try to find different opportunities? Somebody was talking to me this morning about mixing gold and Bitcoin, and those markets have their own characteristics, their own volatility properties, their own forwards. Is that an interesting area for your clients to explore?
That's one of our targets right now. We see that a lot of our clients might have a big gold book, a gold derivatives book, and they kind of live and die by the volatility of their major assets. So we're trying to get them to look at Bitcoin and other assets to smooth that out. As more users look at the digital assets, there's more volatility, there's more opportunities for the financial institutions to make money. So we're trying to convince them that, and especially with the younger traders growing up, there's a much higher interest in crypto from the younger users. So it helps them sort of stay relevant.
So on Wednesday, the New York Stock Exchange made an announcement that it is going to apply to list index options, cash settled index options, settling to a Bitcoin index, the CoinDesk Bitcoin Price Index. Once approved, that will open up a big world of risk management and fantastic options market for users in the United States and around the world. Will that drive more business into you because there'll be more overall activity? How are you thinking about that kind of progress in the United States?
Yeah, it's healthy for the space. So the more types of activity you have, the better the liquidity is. You have different people doing different things for different reasons, which tends to drive price action and liquidity at different price levels, and that's great for everybody. I think the more opportunities there are, the more ways there are for people to trade how they want to trade, it just makes the whole market a little bit more smooth and more liquid.
So we're all operating in this business for years now, maybe some of us up to a decade, and the banks are just not participating, right? They just can't. Yet now we have ETFs, and you're starting to see some 13Fs being filed, and they're going to end up on some prime brokerage sheets, and they're going to end up on bank balance sheets at some point soon. Derivatives may be another way for banks to start participating in this asset class. Is that something you're thinking about? Because, of course, this is the biggest untapped pool of interest and capital and activity. How do you think about that in using Pascal's idea, like looking 5 to 10 years forward rather than 6 to 12 months?
Yeah, I think banks tend to be the slowest of the financial institutions to move, especially in the U.S. And there's a lot of regulation, uncertainty right now. But I think that's, like you said, big potential in the next 5 to 10 years. So we're hoping that those things change as the next years come through. There's other countries doing different things and opening things up a little bit faster. So we're hoping that comes to the United States as well.
Do your clients, they're serving other clients, right, who have speculation or risk management? Your clients are brokers or people who are, taking principal risk against their clients. What's your sense is about how risk management has evolved over the last couple of years, right? Hopefully, one would wish that you were seeing a better balance between risk management business and speculation business. Can you detect that from where you're sitting?
I think the people that don't do risk well tend to get shaken out pretty quickly. So I think it's a good time if you have good risk management sort of processes in place. I think it's a good time to get into the space, just because you have that clarity from your history, and this asset class is no different than anything else. You do have to pay attention. You do have to put in your parameters. So I think it's a good time for anyone that has comfort in that to really get involved.
I'm older than I look, and I was sitting on a desk when the euro happened, right? And was where all these FX people who were doing, Deutschmarks versus French francs, what they were going to do. But, the FX business has been great. That being said, you see a lot of FX intuition and a lot of FX intellectual property work its way into the derivatives markets in crypto. How vibrant is that space? Are you seeing a lot of familiar faces that you would have seen in your old life? And is the FX derivative, I guess, construct as compared to equities or rates kind of the right one to think about for something like Bitcoin?
Yeah, so I think a lot of the FX clients we had in the past are now getting into digital assets. It is very similar in a lot of ways. They're used to the 24-hour nature of the market, although not in the weekends. They are used to the 24-hour market, which is a nice easier transition from some of the other asset classes. So yeah, we're really pushing towards our old industry, the FX industry, to look at this asset class and really get into it in a big way. So yeah, we're excited about that.
Here's a big question. Bitcoin sort of needs a yield curve, right? And we have to be able to think about forwards properly and transparently. So how do you think about that now? Is that just priced by the market, the borrowing and the lending? There's no LIBOR for Bitcoin, right? What kind of structure do you think is going to be needed to firm up the way that that part of the market works?
I think standards and indices, things like you guys are doing, I think it's important to have just that price discovery at the longer time cycles. I think as institutions who know more about this get into the space, we'll start to see that more. Right. It's largely been a retail-driven market in the early days, and you don't have that familiarity with some of these things. So I think that's changing and will continue to change.
So what's your hope if we're sitting in these chairs at Consensus 2025, which will not be in Austin, but will be elsewhere? What do you hope to see happen, at least in the next 12 months?
Yeah, I think I'd like to see more of the yield curve, more of the derivatives, more of the more structured products, the things that you need to do other things in the asset class. I'm excited to see what happens. I'm excited to see some of the bigger institutions get in. I'm excited to see what happens with the regulations. Hope that goes our way and just grows the industry.
Fantastic. Thank you so much. Thank you, Ian. That was Shift Market CMO Ian McAfee.